Kospi 200 futures. A basis divergence signal has just been activated. We're about to decode a critical warning flare from the Korean market, and believe me, it has major implications for tech stocks across the globe.
Okay, let's get right into it. On the surface, things look good. The main Korean index, the Kospi, closed in the green. But that's just noise. The real story, the one that actually matters, was happening under the hood, a massive withdrawal of 2.67 trillion won by foreign institutions.
So here's the bottom line, right up front. What we just saw in Seoul is a direct warning shot for U.S. tech stocks. We're watching smart money, the big informed players deleveraging. And all that means is they're systematically selling off their core holdings to reduce their risk exposure.
Now, let's break this down. The first thing you absolutely have to understand is why that green headline number is a complete trap if you're not looking behind the curtain.
The key mechanism at play here is called basis divergence. So, what is it? It's when the price of the actual stocks, the spot index, moves one way while the price of their futures contracts moves the exact opposite way. It is a classic textbook signal that large institutions are quietly distributing shares while the rest of the market is looking the other way. And here you see it in plain sight. On the left, the KOSPI spot index, it closed up. But look to the right, the KOSP 200 futures index closed down. When these two diverge like this, it is a high alert signal. You have to pay attention. And when you add up all the pieces, the total net sell from foreign capital was a staggering negative 2.96 trillion Korean won. Let's be clear, this was not just a simple rebalancing act. This was a liquidation event, a deliberate, active sell-off of major positions. So the big question is, if almost 3 trillion won just bailed on some of Korea's biggest companies, where did it go? And that question, well, that leads us right to the next part of the story, decoding the smart money rotation. This slide lays it out perfectly. On the left, you see capital fleeing core exposure like Samsung. But it didn't just vanish. No way. It pivoted with surgical precision into what we call upstream alpha. These are the critical supply chain nodes that feed the giants. And a prime example is right there on the right, Jusung Engineering, which saw a signal activation of over 19%. That is not random. That is a deliberate capital reallocation. And here's where the pressure is focused. We're talking about the big hardware producers, the bedrock of the Korean tech index. This is ground zero for the deleveraging we were just talking about. But that capital is finding a new home upstream in the essential equipment and infrastructure providers. And what does that tell us? It tells us this wasn't some panic-driven sell-everything move. It was a highly strategic, calculated repositioning. Okay, so we've established exactly what happened in Seoul. Now it's time to connect the dots to the U.S. market. How does this capital flow in Asia translate into an actionable vector for the U.S. Open? And this is where things get really interesting, because we have conflicting signals. It's a puzzle. On one hand, the supply chain rotation is practically screaming buy equipment. But on the other hand, the currency market is flashing a major warning. The weakening Korean won suggests investors are getting nervous, risk-averse. One of these signals is the real move, and the other is a trap. The tiebreaker, the thing that will solve this puzzle, is the U.S. 10-year Treasury yield. This is the macro trigger. If yields break above 4.32%, the risk-off currency signal is confirmed. But if they stay below 4.20%, the bullish supply chain signal gets the green light to go. All right, analysis phase is over. We now shift to execution. This is your battle plan for the U.S. session based on these signals. Attention to detail is absolutely critical here. Your guiding principle is simple. Remember this: do not trade the headline. Trade the supply chain. Target the Nasdaq 100. Your entry for the bull case is a confirmed close above 24,300. Your exit, the bear case trigger, is a close below 24,150. That confirms the risk-off signal. The zone in between, you stand down. You do not engage. Cash is your position. Wait for clarity. Now, your final confirmation checklist. Watch pre-market volume on equipment leaders like AMT and ASML. Confirm U.S. 10-year yields remain below that 4.32% trigger, and you invalidate the entire bull thesis if the Nasdaq fails to hold 24,150. And all of this leads us to one final crucial question. Is this entire global tech rally just a facade, one that's built on a foundation that is now showing some very serious fractures?
The answer to that question will be revealed at the U.S. Open. We'll be watching to log the result. Thanks for joining this deep dive. Stay sharp out there.